Have you ever wondered how criminals take, a duffel bag full of dirty cash and turn it into legitimate, spendable money? Well, today, we're going to pull apart one of the financial world's most notorious and honestly fascinating processes, the money laundering wash cycle. I mean, that's the big question, right? We see it in the movies, we hear about it on the news. But how does someone with a mountain of illegal cash actually make it usable without getting caught? That is exactly what we are breaking down today. So to really get our heads around this whole thing, we're going to use a super simple analogy. Let's just forget about money for a second. I want you to picture this. You've got a huge stash of dirty candy. Maybe you broke some rules to get it. The point is, you absolutely cannot let the teacher, or in our world, the authorities, see you with it. And that right there, that's the core problem for any major criminal operation. Having suitcases full of cash isn't a sign of success. It's a massive, massive logistical nightmare. You can't just walk in and buy a house with it, or a car, or a business. It's just evidence waiting to get you caught. You need a way to make that dirty money or that dirty candy look clean. You need a financial washing machine. And it turns out that washing machine runs on a surprisingly consistent three-step cycle. First up is placement. That's getting the money into the system. Second is layering, making its origins super confusing. And third, integration, bringing it back out all sparkling clean. So let's dive into each step. So how does this whole process even kick off? It all starts with step one, placement. This is the first and honestly the most risky part of the whole operation, getting that physical cash into the legitimate financial world. The goal here is really simple. You have to introduce that illegal cash into the financial system. You've got to turn a bulky, suspicious suitcase of bills into a quiet, totally normal number on a bank's computer screen. And this is where our candy analogy really clicks. See, you can't give all your dirty candy to just one friend. That would look way too suspicious. So what do? You spread it out. In the financial world, they call this structuring. Criminals will make dozens, sometimes hundreds of small cash deposits into a bunch of different accounts, all to avoid raising any red flags. And this number, this is the magic number. In the US, any cash transaction over $10,000 gets automatically reported to the government. So, what do? You just make endless deposits of just under that amount, $9,999. It's all designed to fly right under the radar. Okay, so the money's in the system. Now the real fun begins. Step two is layering. The goal here is pure intentional confusion. You want to make that money's trails so complicated, so twisted, that no investigator on Earth could ever trace it back to its original dirty source. Yeah, the whole point of layering is just to create distance by building this crazy financial maze, this web of wire transfers and shell companies. It's all designed to make it basically impossible to connect the money back to the crime it came from. It's just like back in our schoolyard. Your friends don't just hold the candy. No, they start trading it with each other, mixing your dirty candy with their clean candy until nobody knows who started with what. Financially, this means wiring money between dozens of accounts, and they often use these anonymous shell companies, which are basically just fake businesses that exist only on paper to hide who really owns the money. And to make this even more effective, these transactions almost always cross international borders. They'll hop between different countries that have really strict financial secrecy laws. Places like Panama or Cyprus are super popular because they make it incredibly difficult for outsiders to see who really owns an account or a company. So, let's watch the dance. First, that deposited cash gets pulled together into something called Shell Company A. Again, a company that just exists on paper to hold the money. From there, boom, it's wired out of the country. It lands in an offshore bank in a place like Panama, which adds a whole other layer of international complexity. But it doesn't stop there. From Panama, it might then get wired to another shell company, maybe this time in Cyprus. After a few more of these dances, the money's origin is completely buried. And now for the final step. This is the part where it all pays off. Integration. The money's been placed, it's been layered, and now it's time to bring it home as clean, totally spendable cash. Integration is the finish line. The now clean money comes back into the economy in a way that looks completely normal. This is where the launderer finally gets to use the funds without any fear of them being traced back to the original crime. And our candy story wraps up perfectly here. All that mixed up candy gets pooled together to buy something big and legitimate from the school store. Now, nobody can say where the candy to buy that shiny new thing came from. It just looks like a totally normal purchase. In the real world, this usually means buying high-value physical assets, a strip mall, a luxury apartment building, a whole fleet of cars. That laundered money from the company in Cyprus is used to buy the asset, and just like that, the criminal owns a legitimate, income-producing property. The wash cycle is complete. Now, the candy analogy makes this whole process sound kind of simple, maybe even a little playful. But it is so important to understand the real-world stakes here, because this is so far from being a victimless game. The dirty and dirty money, it comes from very real, very harmful places. We're talking about cash generated from things like drug trafficking, human trafficking, terrorism, and just massive corruption. And the cost is immense. Money laundering is really the engine that lets organized crime function and grow. It erodes trust in our banks, it distorts entire economies, and it allows the absolute worst criminal actors to hide their profits and wield enormous power. So, the most crucial point is this. Money laundering isn't just about cleaning cash. It's a process of alchemy that transforms the profits from crime into legitimate political and economic influence. It takes dirty money and it turns it into clean power. So I guess that leaves us with one final thought. Now that you know the recipe, the 3 simple steps for turning dirty money clean, what do you see differently? The next time you hear about some anonymous company buying a luxury condo or a really complex international business deal, what questions are you going to ask?